Welcome back, everybody, for another deep dive. And today we're going to be talking all about Antony Waste Handling Cell Ltd. and their second quarter results for fiscal year 2025. We've got quite a stack of stuff to get through. We've got their press release. Of course, we have the auditor's review report. We've got a really fancy investor presentation. And we even have some questions that we received beforehand that we're going to try to get to. And the reason why I think this deep dive is going to be particularly interesting is because the auditor's report has some qualifications and uncertainties in it that I think are worth exploring a little bit further. It's like we get a sneak peek behind the curtain of their financial performance.
Yeah, it's really interesting how, sometimes a seemingly routine report can kind of become a bit of a detective story.
Well, absolutely. But before we get into all that, let's just set the scene a little bit. So at first glance, it seems like Antony Waste is doing pretty well. They reported a 1% year-over-year revenue growth hitting 460 crore, and their revenue from MSW processing, that's municipal solid waste processing, shot up 21% year-over-year for the first half of the fiscal year. So that's a pretty clear signal that their strategic shift towards focusing more on processing is really starting to pay off.
Yeah, and I think if you look at it within the context of just the broader industry, the increasing urbanization, the rising waste generation, and government initiatives that are really pushing for a more circular economy, Antony Waste seems to be kind of positioning themselves right in the sweet spot of this evolving industry.
Yeah, absolutely. And they're not just processing more waste either. They're managing a massive amount of it, almost 1.2 million tons.
Yeah.
And they've seen incredible growth in the sales of refuse-derived fuel and compost, both exceeding 50% year-over-year growth for the first half of the fiscal year. And they're even dipping their toes into some exciting new areas like waste to energy, which is basically turning waste into electricity, and biomining, which uses microorganisms to extract valuable resources from waste. So it's really turning trash into treasure.
Yeah, I think it's impressive how they're really moving up the waste management value chain. So traditionally, companies like Antony Waste really focus primarily on MSW C&T. That's municipal solid waste collection and transportation. But by venturing into, processing waste to energy biomining, they're really tapping into higher margin services. And they're kind of aligning themselves with the sustainability trends that are shaping the industry.
All right, so let's take a closer look at their consolidated profit and loss statement. One thing that jumped out at me is the shift in revenue streams. So while the MSW processing revenue is soaring, their traditional MSW C&T revenue actually dipped a bit.
Yeah, that makes sense, considering their strategic direction. Processing generally commands higher margins compared to collection and transportation. So even if the C&T revenue dips slightly, the overall profitability might actually be positively impacted by the growth in processing.
Okay, so speaking of profitability, their EBITDA margin for Q2 slipped to 21.4%, down from 24.6% last year. And for those who might not be familiar, EBITDA margin is basically a measure of a company's profitability from its core operations. Essentially, it shows how much profit they're making before factoring in things like interest and taxes. Now, a dip in this margin can sometimes be a little bit of a red flag. Should we be concerned?
Well, that's a great question. And it highlights the importance of looking beyond just the top-line numbers. A decrease in margin doesn't always spell trouble. In this case, Antony Waste is investing heavily in expanding into new areas. And these investments often involve upfront costs. And they might initially yield lower margins as they kind of scale up these new ventures. So think of it as kind of planting seeds for future growth. It takes time and resources before you see the full bloom.
So they're playing the long game here.
Yeah.
Okay, well, let's turn to that intriguing auditor's report where things get a little more complicated. So they flagged some concerns about outstanding receivables, specifically notes 2, 3, and 4 of the consolidated unaudited financial results. And it seems like there are disputed amounts that Antony Waste is owed, but there's uncertainty about whether they'll actually be able to collect them.
Yeah, this is where I think the auditor's perspective becomes particularly valuable. Because they're essentially saying, hold on, while the company believes these receivables are good, we're not entirely convinced. And these disputed amounts total a pretty significant sum. So Note 2 mentions 566.39 lakhs tied up in legal disputes. And Notes 3 and 4 point to even larger sums, 2,000 euro, 5.95 lakhs, and 1,500 lakhs, respectively, also under dispute. These are not small potatoes.
Wow, those are some hefty numbers. I know we don't want to get too bogged down in the accounting jargon, but just to put this into perspective for our listeners, what are the potential implications if Antony Waste can't recover these disputed amounts?
Well, in simple terms, it could create a cash crunch for the company. If those receivables turn out to be bad debts, it could really impact their profitability and even their ability to invest in those exciting new growth areas that we just discussed. It's like planning a big road trip, but realizing that you might have some unexpected car repairs to deal with.
So not exactly a flat tire, but potentially a dent in their expansion plans?
Exactly. And that's why it's so crucial to understand the context of these qualifications. It's not necessarily a reason to panic, but it definitely warrants closer attention.
Okay, so we've got this potentially tricky situation with the receivables. But to make matters even more interesting, the auditor brings up another point: a search operation by the Income Tax Department back in 2021. This is mentioned in Note 7, and it seems like there are some unresolved issues stemming from that investigation.
Yeah, this kind of adds another layer of uncertainty. While the details are a bit vague in the report, it involves potential tax liabilities that could arise from that search operation. Now, the company assures us that they're cooperating with the authorities and they believe they have a strong case, but again, it's kind of a cloud hanging over them until the matter is fully resolved.
Okay, so we've got potential challenges with receivables, we've got potential tax issues looming in the background. It's starting to feel a bit like a financial obstacle course.
It does make you wonder how these factors might impact their ambitious growth strategy.
Right. But before we get too carried away with the what-ifs, let's maybe switch gears a little bit and look at what Antony Waste is actually doing to kind of navigate this situation.
Yeah, you're right. So let's dive into their strategic initiatives. They've outlined some pretty exciting plans for the coming quarters. Operational efficiency seems to be a big focus, as well as a cluster-based approach for expansion. And of course, they're really pushing into those emerging growth areas we talked about: waste to energy, segregation, and biomining. It's like they're saying, we've got a plan and we're sticking to it.
Yeah, and that plan seems to be rooted in both opportunity and caution. So their commitment to operational excellence, as highlighted in the investor presentation, signals a focus on maximizing profitability. But at the same time, their cluster-based approach focusing expansion in specific regions suggests a deliberate strategy to minimize risk and leverage existing infrastructure. It's interesting how they're balancing this ambitious growth strategy with a cautious approach to risk management. It almost feels like they're playing chess, thinking several moves ahead.
That's a great analogy. They're certainly not just chasing every opportunity that comes their way. They're being selective, focusing on projects with strong financials and minimal counterparty risk. And that might be exactly the right strategy in a complex and evolving industry like this.
Okay, so we've covered a lot of ground. We've looked at Antony Waste's impressive performance in certain areas. We've explored the challenges highlighted by the auditor. And we've uncovered their ambitious plans for the future.
Yeah, it's like we've assembled all the pieces of the puzzle. Now it's time to see how they fit together.
Absolutely. And now let's really put ourselves in your shoes. If you were an investor, what would stand out to you from everything we've discussed so far? Would it be the impressive growth figures or the potential risks highlighted by the auditor?
That's the million-dollar question. And to answer that, I think we need to dig a little deeper into their strategic initiatives and how they plan to address those potential bumps in the road. Picking up where we left off, let's talk a bit more about how Antony Waste is addressing those concerns that the auditor raised about the outstanding receivables. I mean, it's one thing for the management to say, don't worry, but, actions speak louder than words, right?
Yeah, that's a really good point.
Yeah.
The investor presentation does touch on their efforts to improve collections and manage receivables, but I'd love to hear your take on it. Like, what concrete steps are they taking, and do you think these measures are sufficient?
Okay, well, they highlighted a few key strategies in the investor presentation. The first is that they're focusing on strengthening their contractual terms with municipal corporations. And this involves things like negotiating clearer payment timelines and penalties for late payments. So it's kind of like setting clear expectations up front. To minimize the risk of disputes down the line.
Yeah, that sounds like a pretty sensible approach, almost like, tightening up the ship's sails before you head into potentially rough waters.
Exactly. Second, they're implementing a more robust credit evaluation process. So this means they're being more selective about the projects they take on, carefully assessing the financial health of their counterparties before signing any agreements. It's a way to avoid getting entangled with municipal corporations that might have a history of payment delays or financial instability.
So no more blind leaps of faith.
Precisely. And then third, they're investing in technology to improve their billing and collection processes. This involves automating certain tasks, making it easier to track invoices, send reminders, and even flag potential payment issues early on. It's like having a digital assistant to help them stay on top of their finances.
Okay, so it sounds like they're really taking a multifaceted approach to tackling this receivables challenge, combining proactive negotiation with stricter due diligence and smart technology. Do you think this will be enough to appease the auditors? And perhaps more importantly, assure investors that they're taking this issue seriously?
Well, I think it's definitely a step in the right direction. These initiatives demonstrate a commitment to improving their financial controls and mitigating risks. But ultimately, the proof will be in the pudding. We'll have to wait and see how these efforts translate into actual results, a reduction in disputed amounts, a smoother collection process, and hopefully fewer qualifications from the auditors in future reports.
All right, so we'll keep a close eye on those receivables. But let's shift gears a little bit and talk about their strategic initiatives, particularly those exciting new areas of growth they're pursuing. Waste to energy seems to be a hot topic these days. And Antony Waste is really positioning themselves as a leader in this space. I mean, they even boast about having the largest single-location waste processing plant in Asia, their Kanjurmarg facility. It's capable of handling a mind-boggling amount of waste, about 5,800 tons per day.
It's a very impressive feat, no doubt. And they're not stopping there. They're also operating Maharashtra's first integrated waste-to-energy project in Pimpri-Chinchwad, which, as you mentioned earlier, was inaugurated by the Prime Minister himself. So that's a pretty strong endorsement of their capabilities.
Oh, yeah. That definitely adds a lot of weight to their claims. But can you just break it down for us a little bit? What exactly does waste to energy entail? For those of us who aren't engineers, can you explain it in a way that even I can understand?
Sure. Imagine a power plant. But instead of burning coal or natural gas, it's fueled by waste. It might sound a bit strange, but the basic principle is very similar. You're essentially burning the waste to generate heat, which then drives turbines to produce electricity.
So you're basically turning trash into power. That's incredible.
Yeah.
What kind of waste are we talking about here?
Well, not everything that you toss in your trash can is suitable for waste to energy. It typically involves non-recyclable waste, things like plastics, certain types of paper, and even organic materials that can't be composted.
Okay, so it's not just about reducing the amount of waste going to landfills. It's also about generating a valuable resource, electricity.
Exactly. Waste to energy offers kind of a double benefit, diverting waste from landfills, which are already overflowing in many cities, and generating clean energy. So it's a win-win situation from both an environmental and an economic perspective.
It's a fascinating solution, and it makes sense why Antony Waste is betting big on it. But they're not limiting themselves to just waste to energy, are they? What about those other initiatives, biomining and advanced segregation? What can you tell us about those?
Okay, so biomining is a relatively new technology, but it's gaining traction as a sustainable way to deal with legacy waste. So think of those massive mountains of trash that have been accumulating in landfills for years. Biomining involves using microorganisms to break down the organic matter in these landfills, extracting valuable resources like compost and biogas in the process.
So it's like giving those landfills a second life, turning them from environmental liabilities into potential resource hubs.
Exactly. And as for advanced segregation, well, it's all about improving the efficiency and accuracy of waste sorting. Traditionally, waste segregation has been a very manual and often inefficient process. But with advancements in sensor technology and artificial intelligence, they're now able to automate much of this process, separating different types of waste with much greater precision.
That's amazing. I can only imagine how much more efficient waste management becomes when you can accurately separate recyclables, compostables, and materials suitable for waste to energy. It's like streamlining the entire waste processing chain.
It is. And this focus on advanced segregation aligns perfectly with their other initiatives. It ensures they're getting the right materials to the right processing facilities, maximizing the value they can extract from the waste stream.
It's all starting to come together,
Yeah.
like a beautifully orchestrated symphony of sustainability.
Mm.
But let's bring this back to the listener for a second. So we've talked about Antony Waste's impressive performance in some areas, the challenges highlighted by the auditor, and their strategic push into these exciting new areas. So what does all this mean for someone who might be considering investing in this company?
That's the key question, isn't it? And to answer that, I think we need to look at the bigger picture.
And that's where we'll pick up in part 3 of our deep dive. Okay, so we're back for the final part of our deep dive into Antony Waste. And so far, we've done quite a bit. We've explored their financial performance, we delved into the auditor's concerns, we uncovered their ambitious plans for the future. It's like we've assembled all the pieces of the puzzle. Now it's time to see how they all fit together.
Yeah, and I think it's all about understanding the bigger picture. And in this case, the backdrop is a rapidly growing industry with enormous potential. Urbanization is on the rise, waste generation is increasing, and governments all around the world are pushing for more sustainable solutions. This creates a really favorable environment for companies like Antony Waste that are at the forefront of this transformation.
So they're riding this wave of opportunity. But they've also got those pesky rocks to navigate. The auditor's qualifications. It's like they're sailing in uncharted waters with both exciting prospects and potential hazards ahead.
Yeah, and I think that's a great analogy. It highlights the importance of not getting swept away by the hype. Yes, the potential is there, but investors need to carefully weigh the risks and rewards. Those disputed receivables and potential tax liabilities could create some turbulence along the way.
So for investors who are listening,
Yeah.
what are some key things that they should be watching for in the coming quarters? What would indicate smooth sailing versus stormy seas ahead?
Okay. Well, I'd say keep a close eye on how they're managing those outstanding receivables. Are they making progress in recovering those disputed amounts? Any significant write-offs could impact their profitability, and it could cast doubt on their ability to execute their ambitious growth strategy.
Right, so it's not just about expanding into new areas. It's also about ensuring that they have a solid financial foundation to support that growth. It's like building a house. You need a strong foundation before you start adding floors.
Exactly. And speaking of growth, pay attention to how they're progressing in those emerging areas like waste to energy and biomining. Are they securing new projects? Are those projects meeting their financial targets? Success in these areas could be a key driver of future growth and profitability.
And of course, we can't forget about sustainability. It seems to be woven into the fabric of their strategy.
Mm-hmm.
But, are they walking the talk?
That's an important question. ESG considerations are becoming increasingly important for investors. It's no longer just about financial performance, it's also about a company's impact on the environment and society. So look for concrete evidence of their commitment to ESG principles. Are they reducing their carbon footprint? Are they implementing ethical waste management practices? A strong ESG profile can not only enhance their reputation, but it can also attract investors who prioritize sustainability.
Okay, so it's about looking beyond the numbers, understanding their strategic direction,
Yeah.
and assessing their commitment to sustainable practices. It sounds like a lot to consider.
It is. But that's the nature of investing. It's not just about picking stocks. It's about understanding the complexities of a company. It's about understanding its industry and its potential for future growth.
Well, you've definitely given us a lot to think about. But before we wrap up this deep dive, I want to leave our listeners with one final thought-provoking question. Considering everything we've discussed, their financial performance, the auditor's qualifications, their strategic initiatives, and the broader industry landscape, how might Antony Waste navigate the challenges and capitalize on the opportunities to achieve sustainable long-term success?
That's the million-dollar question. And I would encourage everyone to explore the source material, do their own research, and draw their own conclusions. There's no easy answer. But that's what makes this deep dive so fascinating.
This has been The Deep Dive, your shortcut to being well-informed. We hope you enjoyed this journey into the world of Antony Waste. Until next time, keep exploring, keep questioning, and keep diving deep